Good evening, traders. Today's Wednesday, March 22nd. We are going to start backwards tonight and then work our way to the FOMC action. I'm going to start off with this. I'm not going to talk about the fact that I called for Dixie's decline over a month ago when I said, oh, it's not going to take 104. Right now, Dixie's down to 102. What I'm going to show you is a classic example of loss of momentum. See this gray line? That's the SMA20 line. See that? And you see how that's resistance? That's what I talk about every day, intraday. Every day I say, I want to see how it interacts with that SMA20 line. In Dixie's case, it's resistance. You can't even get past that, let alone you ain't taking over EMA50 if you can't even get past SMA20. Full stop. Okay? And what happened? Goodbye. But we already saw that coming over a month ago. Okay? I want to show you this because once again, I'm going to prime the pump so that you can't dispute it. What I'm going to show you next. SPY futures tonight. Not only, this is the SMA20 line, you can barely see it, here's the gray line. Not only did the SMA20 gray line not be resistance, not reject futures, futures took it back, and now futures took back EMA50. This screenshot is old. This is when it was plus 0.3. It's now over 0.42. It's even higher now. Where am I going with this? Despite a supposedly huge sell-off, which we all were talking about yesterday, we said, well, when is it going to fill that gap? Now we know. It was today. Despite a huge sell-off, you're going to tell me that SPY futures reclaimed the SMA20 that same evening and now reclaimed EMA50, which I have said all along is indicative of a trend change? That's right. It took the EMA50 back tonight in futures. Higher lows. Up we go, guys. I'm going to show you more patterns that I saw, but I didn't have time to tweet it all because the action was moving too fast. There were repeating bullish patterns today that were present yesterday. Yesterday when I called early that gap and go, I'm going to show you the same patterns repeated again. And that's why I actually got calls. Initially, my calls were trapped. But now, as you see here in futures, oh, they're going to come back. I'll probably scale into more of them tomorrow. Because remember, yesterday I learned my lesson. I'm not going to abandon my calls when I see some bullish, hidden bullishness. And I didn't abandon them this time. I even tweeted, I said, I'm buying puts, but I'm not selling my calls. Because of this very thing that you're looking at on your screen right now, I knew was going to happen. This was all just to go down to fill that gap, and the uptrend resumes. Why? Well, first of all, here we go. Here we go. This is today. This is yesterday. Immediately when I called for that gap and go is when you had in the morning yesterday higher highs right off the bat, first 30 minutes. Okay? What happened? Higher highs. First 30 minutes. This is higher than that. Okay? I remember yesterday I said, whoa, when I first noted this, I said, oops, let's go back over there. When I first said, uh-oh, that is higher than that, that's another sign. I was like, they're going to take it the other way. They're going to take it the other way. And then that is higher than that. Okay? Guess what happened at FOMC? That is higher than that. I immediately recognized that. Same pattern as yesterday. Okay? Now, you want to notice something? As soon as it filled that gap down here, came and consolidated under, this is SPY, extended hours, under the half channel line. And what have I always said? Consolidation under a major channel line. Like, for example, this is the half channel. This is the full channel. Consolidation under the line is what? Bullish. I've always said that. And tonight, SPY futures took back EMA50. And that's all she wrote. Why is it all she wrote? Because of this. There's a hidden regression line right here. It stopped flush with that regression line. Look at that. Stopped, bounce up, found support, up we go. And now it's taking back, whenever I took the screenshot, zoom in, there it is. It's taking back EMA50. It's gonna resume, guys. We're not going lower. There. This is simply a resumption of this line. It's a regression to the mean. Okay, this is gold. Why am I talking about gold? You're going to see tweets about that, because I swung trade gold today. I've been waiting the last couple of days. I've been watching it for the last 3 days. I knew this was the peak. I knew this was going to fall. I knew this was going to fall. But I want to zoom in. You're going to see tweets in a moment where I was talking about gold. I saw this. This is the 1 hour chart, by the way. This is FOMC. And it was at this moment right here when I sent that tweet. I said, hey, by the way, guys, I'm swinging long on gold. Just to let you know. Consolidate under EMA, a 1 hour, 65-minute EMA50, found support at 65-minute SMA 20. Sound familiar to you? Boom. That coincides, as we all know, you guys know, gold is Dixie's proper opposite. So when gold goes on a run, it now believes Dixie will fall. I use the word believes. I got that word from the Maverick of Wall Street, by the way. He uses that word. Does gold believe the dollar will fall? If it does, then gold will run. And as I have shown you, as I've said last month, the dollar will fall. And now gold's time is now to run again. So that's what I wanted to show you. You'll see tweets about that in a second. There you have it. Boop, going up. Right there. This is a resumption. Right there. Okay. All right. So, this is just this morning. I said, this is an educated guess. At 2 p.m., there will be an initial spike up. 2:30, 2:30, it will come the big down move. Well. Then Then whether it stays down there or rips back up depends on what MM has planned from Jay Powell's speech. Well, now we know the plan was to fill the gap. Okay? I sent that tweet when it was like right here, long before things actually happened the way they did. Okay? Okay. Oh, so this is February 16th. You can just draw a pink line or whatever line you want to use, whatever color, to today. That's the downtrend line. That would have intersected right here, right there. Okay. So, aha, here's where I'm talking about Dixie. Um, Remember earlier I said SMA is now resistance. Okay. The MACD is a fair amount below the zero line. Down here, there's no way there's no way. You can't even take back SMA 20. 0% chance you're going to take back EMA50. Zero. Zero. And what happened today? FOMC, despite Jay Powell at the end, he says he sees no path to cutting rates in 2022. Doesn't matter. Dixie still took a nosedive, straight down. Now it's down to 102. It was always, that's just evidence. It doesn't matter what Powell says. Dixie's technicals already show it's weak. Doesn't matter what Powell says. Powell today was actually, because I listened to him live, he was actually more or less dovish. He was dovish. He wasn't. He didn't come across as hawkish to me, like he was at Jackson Hole. But despite that, the markets had already decided it was going to go down and fill that gap. That's what it was going to do. But it left clues of bullishness that I showed you earlier already. It left those clues of bullishness. Now, I talked about Dixie because here we go. I'm talking about gold. This is like, yeah, midday, almost noon. I'm talking about gold. I will compare this to gold next. Aha, 65-minute gold. Do you notice? That's what I just showed you a little bit earlier. There's consolidation under the EMA50. The MACD has a positive cross and separated from the signal line. Oh, let's see if you can see some of that. Zoom in. Yeah, sort of, kind of. Not really. Okay, so MACD was positive cross, separated from the signal line, heading back to the zero line, somewhat revealing what gold does relative to Dixie, because they are proper opposites, just like S&P 500 and VIX, right? Okay, here we. Oh, where you at? I hope this is not the 15-minute. It's a 15-minute chart again. Jeez, of course. Okay, well, it was right here. Consolidation. On your mark, set. We all know what happened. Spike up. Okay. And now, yep, here we go. The first spike. I tweeted it right there. Would have been like right here-ish or so. Something like that, yep. And here we go. FYI, gold, April 28 expiration, 182 call, swing long. That's what I did. And I'm going to hold it now for a little bit. Okay, so, okay. Now, it was at this time, it would have still been under this candle, I think, or this one, that I'm scaling long. I scaled long, right here. Oops. Yeah, well, about right there. Something like that. Okay. Now, yeah, here's what I'm talking about. The 65-minute MACD has positive cross. It would later curl back down, but at the time, RSI 84.75. So now look at this. This is a higher low than that. It looks like they're both equal, but I had to put my cursor above it. That's a higher low. So I was like, I'm already seeing there's some strength here. Turns out that, the market maker was just being a butthead and just going to take it down, but now they're taking it back up. So we are resuming the uptrend. Okay. Oh, I was just commenting here, soon the 5-minute candle closes. Where it closes determines if the MACD makes a higher low or lower low. So I wish I would have included the 5-minute so that it's the same representation here than it is over here. Okay. But it turned out that the MACD obviously made a lower low. It didn't make a higher low because it kept going. Sell-off kept going. Okay. Yeah, this is the hourly. This was another telltale hint. Initially, it was a huge wick up on the 65-minute chart. That's what I tweeted right there. Huge wick up. I'm like, oh, somebody's buying this thing back up. I think that would have been like, yeah, right here. Equivalent to right here. Okay. So I'm scaling more. I'm like, well, why not? Okay. Now, it was right. Oh, we'll just call it right here. Right, approximately right here, right there. I actually started buying puts because I started to see, but you see in my tweet, I'm keeping my calls. I'm not selling my calls because I saw strength. I saw all those things that I showed you earlier, but I'm buying puts just to cover because I started to see. I was like, what's going on here? Even though it hasn't like fallen that much yet, right? But I'm like, I'm gonna go ahead and get some puts anyways because I saw the MACD start to get lower and lower, right? So I saw the RSI start to curl down. So I was like, what's going on? Okay, yeah, see. So far the price and RSI are in agreement. Oh, you can't really quite see it. But the MACD is making lower lows. Now you can see that right there. You can see it right there. Okay? So, but price and RSI are in agreement, meaning higher lows. That is higher than that. And the RSI was also in agreement. But the MACD was making lower lows. So see, that's why I'm starting to see these mixed signals. That's why I was like, I think I need to get some puts. Okay, lower lows. I mean, we had just breached this zone right here. That's what that tweet, when I sent the tweet out. And you could, and I said, I think we're going to go down and fill that gap. Right? That's what I thought. I was like, oh, you're going to do it. Scaling more puts. It's good to fill the gap now. It's good. Yeah, it's good to fill that gap. Why is that a good sign? It's because, therefore, you don't have to come back and fill it later. That is more bullish than it is bearish. So, actually, that's all I've got. Please feel free to follow me on Twitter, where I give real-time tweets, like today's FOMC. Guys, the signs are bullish. I just showed you all the signs are bullish. You don't take back EMA50 if you're going to go down. If you're going to go down further, your chart's going to look like Dixie. You're going to get rejected at SMA20 and you're going to keep going down. That's just how it works. Okay? So, yep. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00, signing off.